you to all of you for coming. I hope we'll have more people in the room as we start talking about this interesting topic, which is crypto investments. I have three experts with me on this panel. I wanted to start with, I'm sure you're familiar with Polymarket. It's come up in the news because on this platform, a lot of people living outside of the US have been putting money towards the result of the US election. I believe we've passed the $2 billion mark, $2.4 billion. What do you think about the fact that it became so popular? Are you surprised by that? Who wants to grab this one?
No, we were just talking about it backstage. Well, I'll pass it on. But no, I mean, not surprised at all. It's just another form of a casino, but this one's about a topic that is both timely and people care. So it feels like it has all the ingredients.
Wait, why is Polymarket a casino?
Well, it depends how you define casino.
I think Polymarket is a market, and I think as a market, a big part of crypto has been talking about prediction markets basically as long as crypto has existed, right? People were talking about prediction markets in the Ethereum yellow paper, which was what was that? That was like 2013? Yeah, I think 2013. One of the first things Vitalik said, what are we going to use blockchains for? And his answer was prediction markets. Now, we've been saying that for a real long time, and nobody has been using prediction markets. Basically, it's been a rounding error.
Yeah, there was Augur at first.
Well, non-crypto. There's non-crypto prediction markets.
Right. There's Kalshi, and there's a few others that have been around for a while, like Predicted, and of course there's prediction market betting in the UK, which is legal, so you can bet on Betfair. But I think what you get from something like Polymarket is, one, you get a global, real-time, permissionless, and also much lower take rate betting market that's available for anybody in the world. And to the extent that you think that, is somebody manipulating this? Is this can I really trust these numbers? Is it really true that anybody can bet in this market as much as they want?
Yeah. If you can bet, is it a casino?
You can. What's that?
Said if you can bet, is it a casino?
I think. Well, here's the thing. Right?
I'm joking.
No, I know. But I take that question seriously. So we're investors in Polymarket, and if you think about the biggest markets in the world, one of the biggest markets in the world is interest rate markets, right? Now, interest rate markets, obviously everybody's paying attention right now to the Fed and whether or not the Fed's going to cut interest rates. Now, why are so many people betting on interest rate markets? The answer is because it really freaking matters to their business what the cost of capital is and what the interest rate is. So there's a lot of money that goes into not just betting what is the Fed going to do, but particularly hedging interest rate risk, right? Now, if you think about how important interest rates are not as important as the election. This is one of the most momentous elections in modern history, and there are tons of people who have their businesses who are sensitive to tariffs, people who are worried about trade wars or trade restrictions, people who are worried about EVs, all sorts of things. Massive businesses have huge amounts of exposure to what happens this election, but there's no way to hedge it, which is normally what markets are for. Markets are there to allocate risk. So it's no surprise that a lot of people want to bet on a prediction market on the election if it's truly open and you can bet as much as you want. All of the older prediction markets, like Predicted and even Betfair, there are huge betting limits. So you can bet a few $1,000s, which if you're a business is just immaterial. It just doesn't matter. You can't effectively hedge your position. So people build all these weird composite hedges in the market, but really what you want is to just bet on the election. And that's why I think Polymarket is taking off.
But to be fair, in this case with Polymarket, it's only people not living in the US. So you're saying people want to bet because this election matters a lot. It matters, I guess, more for people in the US than outside of the US.
The US presidential election matters to everybody in the world.
Yeah, for sure.
It's definitely not.
There are people using it who live in the US.
Oh, you think so?
Yeah, of course. Yeah, that's what.
And
with VPNs.
With VPNs, you can do it.
I'm not an investor. I'm not trying to out them, but this is yeah, of course.
Well, I think Haseeb's point also would be, even if it's not U.S. businesses, you have, manufacturers in China for whom tariffs would matter a lot if they were imposed in a Trump administration, and so cases like that, businesses like that, which do have an impact from the election, they can hedge out their position on a market like Polymarket. I think makes sense. Now, I guess the question to you is. There have been, on Twitter, cases where it says, okay, $3 million takes out the whole order book or something like that. Obviously, there's $2 billion in sort of total value outstanding on this particular election. So there's some depth to that market. There's some size and scale to what's been bet historically. But if there's real slippage caused by even $3 million trades, is it really a mature market for for businesses today, or for those, maybe not for businesses, but for market participants who do need to hedge? I don't know if you have a view.
Yeah, I mean, clearly right now, most people betting on Polymarket are speculating. There are people who are interested themselves in the outcome,
do you think the numbers
but they're not
mean
hedging.
something? 65% for Trump and 35%?
They definitely mean something, right?
Yeah. What I would say, look, if you're a business that's trying to hedge on Polymarket, you definitely should not be market buying and just sweeping the order book, right? That's a very bad way to do it.
Agree.
So the reality, I mean, there are a lot of things that you can buy that if you just clunk down millions of dollars, you're going to sweep the order book and get terrible slippage. So I think the election is one of those things that if there's not so much liquidity right now in the election, like it's just not a very developed market. The market makers, this is the first time that this has been a market big enough with enough volume for it to matter. Now, it is true that today you see folks like Susquehanna are now active participants in Polymarket. So there are big players that are playing in this market for the very first time, but I think it's probably going to be a 2028 thing that you see real more institutional grade liquidity on these prediction markets compared to what you have today. Like if you look at Polymarket volumes month over month, every single month makes the last month look tiny. As we're just accelerating toward the election. So a few months ago it was $1 billion in volume, now it's 2.5 billion. And it's only been just a couple months.
But do you think it's going to be, just one last question on Polymarket, do you think there's a risk that it's going to be a bit like OpenSea? There was this moment in 2020, 2021, where NFTs were the huge consumer thing. Everybody was talking about NFTs. And people were like, yeah, but this is just the beginning. Let's just wait 4 years and you're going to see it's going to be even bigger than that.
Yeah.
Now we're having a moment with Polymarket.
That's right.
Do you think this moment is actually just the first stepping stone, or maybe not?
I think it's definitely true that the day after the election, or not the day after the election, but the day after the election is settled.
It's a good thing for Polymarket that the election is not going to be settled for.
Yeah, it's possible that it takes another 4 or 5 days before we actually know who the winner is if it's a tight election.
Yeah.
But the day after the election, almost certainly Polymarket volumes will go down, eyeballs will go down. Like the election is the blockbuster event for any prediction market, and that's always been true. Polymarket's been around for about 6 years now, and if you look at their previous high watermark in volumes, it's always the election. Now, that being said, what Polymarket has shown is the ability to translate this concept, which the election is now reified for the mainstream media, to other mainstream events, right? So if you look at what are the other big markets that took place this year, historically the biggest market is the World Cup, and then the election. But this year, you saw huge betting volumes around LK99, the superconductive magnet, of whether or not it was real. And the second big market was whether Sam Altman would come back to OpenAI. That was also a huge betting market. And so if they can normalize this idea of betting on current events and getting people to start quoting the Polymarket odds as being more indicative than the latest op-ed in the New York Times, that I think is the behavior, if they can normalize that, to take this momentum and build on it. But ultimately, the presidential election is always the biggest thing that is dependent on odds that everybody in the world is looking at. So I don't think that will change. But I think their ability to create a consistent business may continue that momentum that they've built using this.
Yeah, they have to become a destination, basically.
Exactly.
And Will, you haven't talked much, but do you think the result of the election is going to affect the crypto industry in one way or another, regulatory front and other things?
Yeah, I think it's absolutely the case that the political the election is going to affect the outcome for our industry. I think you've got two choices, and we'll talk about stablecoins a little bit, I'm sure. And it's impactful for Polymarket too. This kind of settlement of assets using USDC and stablecoins. I think Trump, obviously, it's kind of very clear that that'll be favorable. Even under the last 4 years under Biden, I do think behind the scenes and maybe the mainstream kind of audience of the crypto industry hasn't seen it, but there's been real strides in the usage of stablecoins for cross-border payments that actually developed under the Biden administration in the most hostile sort of regulatory environment towards the industry that we've had since it's in its existence. And even during that time, stablecoin companies are getting banking partnerships. They are transmitting payments between the U.S. and Singapore, U.S. and Brazil, and then obviously there's also a very large global market. So I think even under Kamala, who's hinted that she'll be more positive, although less explicitly than Trump, things should move in a more favorable direction with one candidate on the Republican side leaning very clearly towards more favorable for the industry.
Are you backing one candidate more than another, personally?
It's not. I mean,
You don't have to answer.
I don't have to go there.
Okay, that's fine. Let's switch gear and talk about stablecoins. That's a very interesting topic and topical as well. I'm sure you've seen the acquisition of Bridge by Stripe last week or 2 weeks ago. Maybe Morgan, because you have a background in stablecoin as well, with your previous work at Libra.
Yeah.
Can you explain in a few words why stablecoins are important?
If we want the U.S. to maintain its position as the reserve currency of the world, that's why. So if you believe that the future of money is more digital than physical, which feels just like a law of physics at this point, and if you believe that stablecoins are going to be a tool in which we get there, you want, as an American, regardless of who wins, that asset to be backed by dollars.
Okay, but with Libra, for instance, the idea was to...
It's my trigger word.
No, but coming back, at some point in the stablecoin industry, there was this goal as well to build a new coin that wasn't necessarily tied to USD, but maybe a basket of currencies. Mm-hmm. Do you think that has some value still or not?
It depends from which perspective. From the perspective of an American who's biased and selfish, he preferred to be dollars. Libra was a very idealistic idea, the basket part. And the idea, for those who don't know, this was Facebook's crypto project. And the idea was that there would be a basket backed by a ratio of various currencies that represented the ratio of the users. So if X% of Libra users were from Europe, X% of the basket would be the euro, Y% Americans, Y% dollars, so on and so forth. And it just became, it's an impossibility matrix to satisfy every regulator in the world. But ultimately, Facebook is domiciled in the US, so that's who we had to cater to first and foremost. And it became a US-backed stablecoin. In theory, it never launched. And what was very frustrating was we were effectively on our knees telling US regulators that we would help them create, build, distribute, and dominate in this digital payments by creating this US-backed stablecoin, and they didn't necessarily want to hear it because of who was creating it at the time. If you fast forward to today, Facebook's like now no longer public enemy number one. But yeah, as an American, you want it to be dollars for sure.
And now that you're out of this company and working on with NFX, if there's a new startup coming along and saying, I believe this idea of a basket of currencies is still worth it, and the name of the company behind it, it's not Meta, or maybe Facebook at the time, I don't remember.
Yeah.
But do you think this still has value today?
Well, what our research showed is it has, in theory, some value, but everyone just wants dollars. That's
okay.
Most people in most countries want dollars. I think it depends what the basket is. Like obviously what's very scary as not only an American, but as a citizen of the Western world is the whole BRICS coalition. And I forget what news came out yesterday, but that they're inviting people to join their basket, which is kind of like the axis of evil. So that basket is scary. So it depends what the basket is, but from all of our user research, despite the fact that we initially planned to build, promote, and push this more diverse asset, all users wanted is dollars.
Interesting.
As much as we keep trying to fuck it up, it's still not bad.
Okay.
Yeah.
And,
well, it seems, maybe just to jump in, it seems like there's kind of a dual use of stablecoins that we can talk about. One is to hold dollars and dollarize in emerging markets as a savings currency, right? And then the other, so as a savings asset, right? And I mean, in comparison to traditional global trade settlements, which I think are 60 to 70% in US dollars, 99.9% of all outstanding stablecoins are US dollars, right? And so stablecoins are pushing the frontier on dollarization, I think, without a doubt. The other aspect of it, which I'm paying a lot of attention to, is the more transactional aspects. Like in some ways, the stablecoin, what it's denominated in, et cetera, doesn't matter that much. Even I've seen some cases of folks using Bitcoin as a transactional currency. But what matters is its ability to be sent and received across borders and then converted into local currencies. Yeah. And I don't know how much you two are seeing what I'm seeing, but the use case that I'm seeing is stable coins on blockchains, doesn't matter which blockchain, Ethereum, Tron, Solana, it doesn't matter, being used as a replacement for Swift rails, right? Swift is a system that's built on COBOL in the 60s that takes 1 to 3 business days for many markets to actually settle payments.
And it's expensive as well.
If you're not a GSIB, basically a global investment bank, you're settling, it's 100 basis points plus. And it depends how many routes, because of the correspondent banking system, you have to jump through. And each bank in that process takes a bite of flesh. The whole payments market is that banks make in revenue annually is $250 billion a year they make on cross-border payments, right? Just on cross-border payments plus FX. So it's a huge market, and we're seeing now people want to settle with stablecoins, fiat to stablecoins, back out to fiat. Do that in an hour at 10 basis points. It's a really clear value proposition, and we're seeing a lot of that, which gets us excited.
What's the breakdown? Do you have data on that, like between financial players, like institutional players using stablecoins, and the sort of savings accounts for emerging markets?
I don't have explicit data on the savings use case in emerging markets versus the transactional use case, which includes both emerging markets and developed markets, and often a direct relationship between the two. What I can say is I know the annual stablecoin settlement volume on like a peer-to-peer transfers basis, where you actually can tell the ERC20 address paid out it's about 5 trillion annually is the estimate.
Wow.
A lot of that is going to be crypto-native payment settlements between trading firms and exchanges. We think the B2B use case with literally commodity trading firms in emerging markets and other institutional or business use cases is about 200 billion annually, and we think that's growing about 40%, 30 to 40% quarter over quarter across the whole market, based on what we've seen on bottoms-up numbers. And so there's really explosive growth on what's a massive market. That's a $40 trillion a year market in terms of payment volume in B2B. So it gets us excited. I can't speak directly to the savings use case versus the transactional use case, because it's always kind of muddled in what different users are doing.
And I guess with savings, you have money sitting in your wallet. I mean, stable coins sitting in your wallet.
Right.
So it's not a lot of transaction volume. It's maybe a few purchases here and there.
And just to tap on one last thing, it's interesting what Haseeb started with about prediction markets, right? Prediction markets were like the use case that was in the Ethereum white or in the Ethereum yellow paper. Payments were the use case in the Bitcoin white paper and in the Ethereum yellow paper. And so these are long talked about use cases of blockchains. Now kind of the market structure has sufficiently developed. It took a lot of time. It maybe took 1 or 2, moments of, some, phenomena. But now I think it's actually pretty developed, some of the core use cases that the industry is going to really bring to market.
And ironic or poetic that the asset is actually just fiat currency that people are perceived.
Do you think, Haseeb, maybe, do you think with this Stripe acquisition, traditional payment companies are realizing that they have to switch, they have to do something, support stablecoins as the infrastructure layer in one way or another to survive the next decade, to be relevant in 10 years compared to the old SWIFT system, for instance?
Yeah, I mean, all these other fintechs are already scrambling. I've heard from a lot of my portfolio companies that they're all getting calls from all the big payments players, and they're just terrified because they have no idea what the hell's going on. And of course, they're very late relative to a Stripe or a Visa. Those guys are pretty sophisticated, and they've been playing in the stablecoin space for a while, as has PayPal. But a lot of the other players just don't really know what's going on. So that being said, I think the acquisition of Bridge by Stripe was pretty idiosyncratic to what was going on with Stripe's business. I don't think it's necessarily going to lead to a wave of M&A. Like, the reality is M&A is still pretty difficult in this environment, given the FTC and just kind of the general suspicion against any kind of acquisitions right now. But very likely over the next 4 years, regardless of whether Trump or Kamala end up in the White House, we're very likely to see a relatively different environment. There's been a lot of reporting that probably both candidates will move away from the kind of Lina Khan, very anti-M&A environment, in which case we may see a lot more M&A along the lines of what we saw with Stripe. But with Stripe, I think Stripe knew that crypto was really important, but they didn't really have the team or the muscle to be able to build it in-house. And so I think they realized they had no choice but to go out and acquire somebody. But I don't know that there are that many other obvious marriages that make sense within the space of payments and stablecoin providers.
Do you think it was a smart price, $1 billion, a bit more than $1 billion?
I mean, whenever you see the headline number on M&A, it's never the real number.
Yeah. Okay.
So there's always like extra clauses, and there's like, oh, struck at the last round price, and there's always shenanigans they do to make the number sound big, because for the acquirer, it kind of sounds good. They're like, oh, we're great to get acquired by because we pay a lot of money, and the company is like, oh, we're worth so much money.
Well, but I'm sure Stripe investors, they don't want Stripe to spend too much money on M&A either.
Well, they're private. It's a private company right now, so they can kind of just tell their board what the actual price was, and then say, look, we're going to announce this big number, but no one really cares.
But if any company that could have built anything in-house of the traditional fintechs, they're as good as it gets.
Right, which is in a way surprising, because it probably means that nobody else is really equipped to do this.
Right, that's what I'm getting at.
Yeah.
I mean, of the Libra Association members, they were by far and large the smartest, or one of the. I mean, yeah, they know what they're doing. So
right.
The other thing I would add to it, that I'm hypothesizing on this a little bit, but I think the transition, when you look at the payments market and you think the different, especially cross-border, and your options, you've got C2C, you've got B2C, which are basically often contractor payouts. You've got C2B. Obviously, Stripe is in the business of C2B, consumers paying businesses for merchant services, often across border, and then B2B, which is like large-scale trade flows. And it's, I think, our view that stablecoins, obviously cross-border, improve efficiency both on cost and speed. B2B is the biggest market. It's 90% of all of those flows that I just mentioned. So Stripe lives in the C2B world, but stablecoins are going to be impactful on B2B, which is the largest market of those that we talked about. And I think so. In some ways, it's an opportunity for them, because it could open them up to an entirely new business line, and to really address a part of the market that they're, from my vantage point, not as well equipped to do with their core business. And so I think it's an opportunistic acquisition in a new market for them as well.
And how do you feel when, in your conversations with crypto entrepreneurs, this switch to crypto being used for the financial rails? Are they good with that? Like, are they okay working for this very specific B2B use case, sort of enterprisey use case? The original promise of crypto wasn't necessarily that you're going to end up B2B payments.
Yeah, I mean, it's true that if you look at the cypherpunk origins of crypto, it's very iconoclastic, it's very subversive, it's not at all about, great, how can we make trade finance settle more efficiently using stablecoins? The beauty of crypto, in some sense, is that it doesn't matter. Okay. Like, you can use Bitcoin to evade the government and hide from the IRS and do all sorts of cypherpunk shit. You can also use Bitcoin to make an ETF, and you can be BlackRock and create a financial product. And Bitcoin doesn't care. Bitcoin does not foreclose itself to any of these, whether it's a cypherpunk use case or whether it's a very staid traditional financial use case. And the same thing is true with stablecoins. Like, the substrate itself of the blockchain is neutral. So you can, bet on an election using a decentralized oracle on Polymarket, or you can, go settle some trade finance with a, U.S. regulated stablecoin license or whatever.
But that's for the technological part.
That's right.
The human aspect, the founders, the developers.
How do they feel about it? Yeah. I think they're just relieved to have a win.
Someone's using it.
Someone's using the blockchain. Thank God.
But one of the principles is removing the middleman. You could even argue that screwing Swift is the cypherpunk.
Yeah,
kind of.
Yeah.
I would go there, actually. Like, I think, honestly,
still accomplishing the promise.
Competing against the correspondent banking system and the implications that will come out of that are actually quite subversive.
Well, I mean, okay, not competing that much, right?
Sure,
the reality is Circle was subject to the banking crisis. We had to get bailed out alongside everybody else. So, the fiat collateralized stablecoins are very much part of the correspondent banking system.
But the point is, you actually don't have to take as many hops in the correspondent process, right?
Ideally, but if you look at Deltec, which is what which is what Tether uses, which is what most of the stablecoin industry lands on. They're deep in the correspondent banking system, because they can't, they definitely can't get a Fed account if you're Tether. So
that's the irony of stablecoins.
It is. I think the way that I would describe it is that it's a parallel system. It's a parallel system that we built.
It's not fully parallel, even.
That is going to replace.
It's parallel in that it is a whole new rewrite of how this stuff actually moves and gets settled. And that's why it's faster. It settles within minutes. It's like, it's the accounting is dead simple, and it's not the like Byzantine process of how do I settle some Malaysian tobacco company trying to settle with some distributor in the U.S.
I just meant not fully parallel, because in order to play, you still need to be in bed with the man.
Yes. But we've invested in a bunch of decentralized stablecoins. There, it is truly every single element of the stack is parallel. So if you look at MakerDAO or Athena, there it's like, everything there is living purely on crypto rails.
But it's the biggest ones.
But the biggest ones are all self-centralized.
And the ones that institutionals can
and
touch.
that'll likely continue.
Do you think these systems are going to merge, or one is going to replace the other?
They play together, right? So if you look at MakerDAO, what's one of the biggest pieces of collateral in MakerDAO? The answer is USDC. So these two things, they work together. Right? There's no reason to pretend the other one doesn't exist.
Okay.
But the question is, if I get kicked out from one system, can I seamlessly start using the other one? Right? In the same way, if you get kicked out of let's say you're one of these Canadian truckers that got debanked, and you can no longer get access to the banking system, well, you can get on USDC.
I think it depends who you are, because like institutions can't go to the fully decentralized route yet. Like,
well, that's the thing. I think with something like, I think we're getting to the world where they can.
Oh, but I mean from like a risk perspective, probably like Fidelity
the risk
can touch
is
USDC, but
right now there's no reason to do it.
Yes.
But once you get kicked off the banking system, you're running an import-export business. You're going straight to using stablecoins.
Interesting. Yes. Coming back to this acquisition from Stripe, does it make you hopeful for your personal investments with your firm, that it's going to be bigger acquisitions in the future? I know you mentioned that it's going to be easier probably with the next administration, whatever the outcome, but even do you see in the future large acquisitions like that?
Well, we never invest hoping that our companies will get acquired. We hope that they become the Stripes that acquire. Okay. So, but maybe more hopeful that there's some soft landings for companies.
Next question then, what's going to be the next crypto IPO then?
Probably Circle.
Yeah, probably Circle. I mean, the next crypto IPOs are already lined up at Series D and E, right? Those are, the Circles, and then down the road, the Fireblocks and the Anchorages of the world. And so I think this vintage, right, the 2024 vintage cohort of Series A companies, I think there will be IPO candidates in the payments use case, right, in that payment space. But it's going to take, 7 years, 10 years for that to play out. But the profit pools are so big, right? We're talking about, bank income statements are your competitor, right? You're going after the $250 billion that banks make annually on global cross-border, and those are huge markets which should be supportive of IPOs down the road.
Interesting. And crypto used to be, it still is a very, very hip market, very hip industry. Feels like AI somehow is even more trendy than crypto used to be 4 years ago, for instance. How do you view that? And do you think you have to diversify your investments?
I work at a not crypto-only fund, so I feel like I have an easy answer. But my partner calls certain people like the fruit flies, like the ones that just go to the sweetest thing.
Yeah.
So those people have left crypto and have gone to AI, and I'm like, okay, fine. Like, you don't want to invest in the fast friends regardless. So in some ways it makes me more bullish on who's stayed in crypto and who's building today, because those are the people that believe in it and want to be there for the right reasons.
Yeah.
And then, AI's taking a lot of those folks out of the room, which is
fine.
Let them have them. Yeah, let them have them. Yeah.
Yeah,
makes it less noisy. Prices have come down somewhat.
I don't think there's that much of a talent pull from crypto into AI. I think most of the people who left crypto went back into regular tech. But the reality is the AI skill set's pretty specialized. Like, you can't just be a crypto bro and go add something.
It's like everything is AI, so it's like
AI. I guess AI is a big tent. But I would say if you're in AI, pivot to crypto. Now's the time.
That's a good one. I think we're going to end on this note. Thank you so much for this conversation.
Thank you.
Have a good time at Disrupt.
Thank you. I like the Kindle, by the way.
Is there